When the next crisis hits, the elites are planning to freeze the financial system, and they'll replace it with a new system, one not based on the US dollar. When that happens, we'll wake up to a very strange and disturbing new reality.
And for our viewers that are watching today, what might their reality look like that morning? How does this manifest?
First, they'll have gone to bed knowing that a massive financial crisis was underway. But when they wake up, they'll find it has worsened and the contagion has spread worldwide. When they go to withdraw money, their ATM will say, closed temporarily. When they go to sell stocks, their account will say, transaction not available. When they go to their local business, that business will only accept cash if it's open. As citizens realize they're being barred from their money, riots will erupt. It's going to get really bad really quickly.
How would such a freeze actually work?
Are you wondering what this is all about? Well, I'm gonna tell you now. Something big just happened in the financial world, and probably you have not heard of it yet. The world's largest asset manager, BlackRock, just told investors they can't withdraw all their money. Yes, you heard that right. People tried to take money out, and the fund said no. And when something like this happens at the largest asset manager on earth, you should pay attention very closely. Let me explain what is going on now in simple terms. BlackRock runs a $26 billion private credit fund. This quarter, investors asked to withdraw $1.2 billion. That's about 9.3% of the fund. But the fund has a rule. They only allow 5% withdrawals per quarter. So what did they do? They paid out about $620 million and locked the rest. That means almost half of the investors who wanted their money back couldn't get it. And this isn't just one company, by the way. We have another giant, Blackstone. They saw record withdrawal requests as well. Blue Owl Capital. They actually stopped honoring withdrawals completely and they replaced it with IOUs. And for those who don't know, IOU stands for I owe you. It's an informal, written document acknowledging a debt between two parties specifying the amount owed and often signed by the borrower. Unlike promissory notes, they are generally not legally binding or negotiable, often lacking specific repayment schedules or interest rates, which is very, very bad. So when this news hit the market, stocks across the private credit sector dropped a lot. We saw BlackRock, KKR, Apollo Global Management, and others. They all fell around 5 to 6% in a single day. Now, to understand the situation right now, you need to understand what is private credit. Private credit funds lend money directly to companies, but these loans are illiquid rather than liquid. They are illiquid. That means they cannot be sold quickly like stocks or Bitcoin. So when a lot of investors suddenly want to take their money back, the fund doesn't have the cash ready. That's what happens. It's like a bank run, but inside the investment world. That's why these funds place withdrawal limits. But when those limits actually get triggered, it usually means a lot of investors are trying to get out at the same time. And that's the part that worries the market right now. This private credit market is now worth about $1.8 trillion. And several pressures are building at the same time. We have rising oil prices, war risk in the Middle East, high interest rates, and even AI disrupting some tech companies that borrowed heavily. On top of that, BlackRock just wrote down a $25 million loan to zero. 3 months ago, it was valued at full price. Now, it is worth nothing. So that kind of sudden loss raises questions about how accurately these funds are valuing their assets. Now, this doesn't mean that the financial system is collapsing tomorrow or today, but when the largest asset managers in the world start limiting withdrawals, it's usually signaling stress that is building under the surface and something bigger is coming. And smart investors, those that know more about this, know more than us, they pay attention to these signs early enough and they take it as early warnings. Because in markets, the biggest money moves long before the headlines. That's the biggest moves where they happen before we see the headlines. And us retail investors, we move after we see the headline. So that's something for us to keep an eye on. It might have a bigger impact and it's definitely a signal that is showing a lot of stress being built under the surface. Now, at the same time, if you look at this chart, right now the world is experiencing something we haven't seen in years. This is the Global World Uncertainty Index, which measures how uncertain the global economy is based on news coverage and economic reports. And what we're seeing right now is something historic. Uncertainty has just exploded to over 105,000, the highest level ever recorded. even higher than the time of COVID, higher than any other wars, even higher than during major global crisis. If I want to put that into perspective, during the September 11th attacks in 2001, uncertainty spiked. During the Iraq War, it spiked again. During the COVID-19 pandemic, the world saw a massive surge in uncertainty as economies shut down. But today's spike is even bigger than all of these. And that tells us something important. Markets don't hate bad news. Markets hate uncertainty. Right now, investors are dealing with multiple unknowns at the same time: geopolitical tensions, trade conflicts, economic shutdown fears, and shifting global power dynamics. When uncertainty explodes like this, one usually rotates in safe assets like gold, oil, and even sometimes Bitcoin. Although in the short term, Bitcoin is seeing more fluctuations because of the uncertainty it's reacting to the headlines. It's a risk on assets, it's the riskier of all these classes. But smart money is using Bitcoin as safe haven, while retail investors are a little bit panicking and afraid. The interesting part here: historically, moments of extreme uncertainty often create the best opportunities for long term investors, and as I said, for smart money. Because when fear is high, assets tend to become mispriced a little bit, and we see Bitcoin massively mispriced right now. It dropped from 126,000 to now only 60,000. It's a drop of 50%. And the investors who stay calm, they analyze the data and position early, are usually the ones who benefit the most when stability eventually returns. And we saw the same happening with gold. Banks have been buying gold heavily since 2022. Now, all the retail investors are coming and piling to buy gold above $5,000 per ounce. But banks have already been positioned long time ago. So the big question right now isn't just, is uncertainty high? It clearly is. The real question is, which assets will win in this new global environment? And this is exactly where we should be thinking right now. That's why I encourage people to accumulate Bitcoin, safe haven asset, to diversify with gold, silver, diversify in other asset classes. Just create your portfolio and have a strategy early enough, because we see some global environment being created, global powers shifting, and soon something very big will be happening. That's for me today. Thanks so much for watching. I'll see you in the next video.